Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Hey, if you like futures because of the tight spreads and clear setups, go check out Blue Guardian Futures. They let you start trading futures with up to $450k in funding. The best part, you keep 100% of your first 15k in profits, then 90% after that. No activation fees, weekly payouts, and they're sponsoring Chris Eubank Jr. and Birmingham City FC. Go take a look at blueguardianfutures.com or click the link in the description.
What's going on, guys? So this is Brinks Trades coming to you live with another breakdown. So again, every week I come on here and do the analysis for the futures and indices markets. Great way to start the week. Our own capital investment. Shout out to you. But yeah, anyway, each week I come on here and just break down charts for you guys and across a bunch of different industries or a bunch of different markets, and so let's go ahead and get into them. Pull them up again. If it's your first time watching, you don't know who I am. Again, my name is Brinks Trades. I've been doing this for a decade now. 2 years on the Trading Nut podcast, but just in the general, like decade for trading. Started in forex, moved to the futures industry a couple of years ago, and really the assets that I trade are really just a combination of currencies and indexes. Let me go ahead and get this pulled up. We can go ahead and get into it. Boom, boom, boom. Again, I love to see where people are calling in from. So when people are calling in, or you guys are watching, there's about 18 people on the call right now. Again, go ahead and drop where you're from, man. Drop where you're watching. I love to see where people are calling in. This is a very global podcast, obviously, with Chris being in New Zealand. I always get that right. I always want to say Australia, but New Zealand. There's just people from all over the world watching. I'm obviously based in the US. There's people from traders from Africa, Europe, Asia, everywhere in between. So it's really cool to watch. So what I want to do is go ahead and share my screen, and we can talk about where we're calling in from. Or where we're calling from, what we're looking at this week. So I had a pretty good week. This past week, I ended up taking one trade set up on Euro futures for a almost 20% gain. Yeah, about 20, just under 20% gain, like 15% on my live account. And so I started taking, I've done this a couple times, but I've done like a 10K challenge where basically I take $10,000 of my own money, right? And I grow it throughout a set period. I really don't have an end date for this, but this mass one, but in previous ones, I've done it, a couple times. And really just to show people that you don't necessarily need prop firms to be able to grow capital, right? They are a great resource. And if you want to make probably the most money, in a short amount of time, obviously prop firms are probably still the way. But if you want to take a skill set, and really use that skill set to grow capital, you can use your own capital. The prop firms aren't always the 100% be all. And I actually did a call with Chris this past week, where we were talking about that, just that kind of touching on, some of the Chris, why am I saying Chris? And I don't know why I'm saying Chris, but I did a call this past week, where we talked about some of that stuff. So it's really cool. You guys don't need prop firms to make a lot of money, to make money in general. I know this new generation is just like caught up on passing challenges and things like that, but you can do those things without actually having prop firm capital. So again, let's go ahead and look at everything. Let's start with dollar index. Again, I start with dollar index because dollar is the is the first, really the kind of like the currency that a lot of other assets are based off of and have a relationship with. So having an understanding of dollar, you can really start to understand where the other markets are going to go. So if we look at dollar index, again, coming into last week, we had a really crazy week last week. And, I called this out halfway through the week in my Discord, Talented 10 Trading. That's my trading community. There's a free chat. There's a mentorship chat if you want to learn exactly how my strategy works. But in the chat, I called this out pretty early, I think at the end of Monday going into Tuesday, that we probably were going to see a counter trend week and really make the adjustments accordingly, right? And there's a couple of reasons for that. Last week on the call, I actually called out, even though I wanted to see things go bearish on dollar, I did call out that we were going to end the month. And usually the last week of the month can technically be a counter trend week. And we see that often where the market, forms, a counter trend week or a lot of counter trend plays that last week of the month. It has a lot to do with how a candle forms, right? And we talk about the open, high, low, close of the candle, and the wicks, and how just any candle forms, whether it's a monthly, weekly, daily. But obviously, when we deal with the end of the month, we're talking about the monthly close, right? So there's a couple of things. If we jump to the weekly time frame, obviously, let's go to the monthly time frame because this is the beginning of August. This is a new month, and really. We saw a couple things play out. So this was pretty much how June or July ended. We ended very bullish, and we closed the week, obviously, trading, Friday with NMP. So if we look at the bigger picture here, we had a really big rejection from this level here. And you can see a clear, pretty much breaking market structure, double top formation. You might call it a double top. I might look at this as a consolidation manipulation into an old liquidity level and then a break of structure, right? But either way, we broke structure and we starting to head lower, right? We ended this month pretty much taking up a lot of that back, and closing, pretty much last week with a very bearish day. So if we jump down to the weekly time frame, again, there's still stuff here that confirms a bearish structure. Just because we had a very bullish week and a very bullish close of the month does not mean that we are not going to continue to go lower. And right now, there's a couple of things that I like that show me the market really wants to continue to go lower. Here again, we broke structure here. I'm sorry, we didn't break structure. We ran up and tapped this area here. And this is one of the levels that I called out last week saying, hey, if the market runs above this high and closes, then this is probably my fail-safe level as far as like looking for bullish opportunities or bearish opportunities for the week. And so we ran up here, ran liquidity, tapped consequent encroachment of this wick, right? And then traded back down and closed underneath this level here. So this is still very much a bearish structure, even though we had a very crazy bullish week. So again, coming to the terminal on Fridays and Saturdays after the market closes, it kind of lets you kind of reset and see what you want to see, or see what you need to see to make the adjustments for next week. But as of right now, this is still very bullish, very bearish structure based on the weekly time frame. If we jump down to the daily time frame, it tells us a little bit of a different story, right? So we see a very bullish market structure. We see the market, obviously breaking structure of the highs, forming higher highs, taking out that fail-safe level that I talked about, right? And this is painting an entirely different picture. So again, we have conflicting kind of like views on what we think should happen based on the time frame. So if we look at the weekly time frame, this is very bearish, right? It's very bearish. There's not really a clean break in market structure. There's a lot of wick action going up to the highs and lows. But if we jump down to the daily, we're getting bullish structure. So this is my pro tip for you guys. If you're looking at structure and you're seeing these things and you're seeing conflicting messages between different time frames, especially like, time frames that are right next to each other, like the daily and the weekly, I usually end up opting for what the higher time frame sees and says versus what the lower time frame says. And that can be any time frame, daily, weekly, it could be 4 hour, 1 hour, it could be 15-minute, 5, whatever, right? What I'm seeing in the higher time frame is usually going to trump what's going on in the lower time frames. So what I'd like to see here is the market really fall back into the trend that the weekly is telling us. And so if that's going to happen, we need to see some stuff inverted. We need to see breaks in market structure. So really this level here is going to be the key level here, this fair value gap here on the daily time frame. So I'm going to be looking at this level pretty closely, heavily throughout the week. Usually, again, I said this in the interview that I did this past week. But really, I'm looking for, Monday to really show me what the market's looking like, and then Tuesday through Thursday is really going to be most of the time where I'm trading throughout the week. Um, so I'm looking at this zone right here, this fair value gap, to see how the market reacts. And I'm not going to come in again. Ideally, I'd like to see the market go bearish. So I'd like to see this invert. And I'm going to make a note here that says want to see inversion. Oops. What happened? Background text. Inside. Okay. Want to see inversion. If we start seeing market, which in the 4-hour time frame is starting to break structure and go down, if we start seeing the market really start giving us rejections from this level, then it could be the market's way of saying we are going to continue with this bullish trend. But I think based on what we're seeing right now on dollar, this could lead to an inverted setup where we run through this and maybe retest it on the downside. But if I'm looking and I'm seeing the market invert this gap, that's going to let me know that the market's going to continue to run lower, maybe attack some of these sell side targets that we wanted to see last week get hit. So really going to be watching this zone carefully again. And, if anybody's been watching me for more than a couple weeks, you guys know that I'm very much against the idea of having two directions, like a if then this kind of thing, right? And you see this all the time from traders. Like they might come up to a support line or resistance line and they'll say, if it breaks through this, then I want to go higher. If it breaks through this, I want to go lower, right? And so very rarely do I ever have like setups like that because I don't think that's helpful as a trader, right? I think you should come to the terminal with a defined bias and direction on where you think the market should go. So the problem that I have with that is, you tend to look for both things playing out. And it sounds good when you do analysis, but when you're actually taking the trade, you kind of are your mind is kind of divided on both ways. And so a lot of times you end up trading against yourself. And if it gives you a slight break below that level, then you're going to start looking bearish. Then start a slight break below this, above this level, then you start looking bullish again. And you can really trip yourself up. Especially if the market were to start chopping in that area too, it really would mess you up. But in this particular case, I genuinely can see both of these options playing out. And so I need more of a confirmation that, to give me an idea on what I think the market's going to do. Right. And so you're going to find these zones in the chart. It's going to happen to every trader. Happens to me at least, a few times a quarter where the market hits levels that I'm not 100% sure where I think the market's going to go higher or lower. I can definitely see it going higher or lower based on a lot of things. Again, the weekly is giving me bearish. The daily is giving me bullish. And so I need more information. And that's all I'm saying here is I need more information to see what's going on. So if this inverts, then I'm going to continue on with this bearish idea that the weekly is going. If we start seeing rejections from the zone, maybe a bullish engulfing candlestick where the market starts running back up, then I'm going to really start to look for bullish opportunities. But this is going to be a wait and see, really. There's nothing to really do here at this point. And so that's going to really affect how we're going to see the markets this week, right? Same thing with going to be opposite of this. So ideally, coming into the markets, what we wanted to see, I'm going to go back to last week. I'm going to chat for a minute. Coming back into last week, what we wanted to see was the market really run higher. And I'll pull up 6E1 so you guys can see this. So we wanted to see the market really respect this value. Up until last week, it was dancing around there. It was giving us clean rejection. So we wanted to see this continue to go higher. And we didn't get that. Obviously, we came out of the gate on Sunday and easily broke below this. I mean, this is literally the first few hours of the day on Sunday. Through this, and I figured at this point it was going to be something pretty crazy as far as the rejections go and us keep going lower. And so that's when I called out to the chat that I'm probably going to start looking for bearish setups. And there was a few. There's actually a lot of really good bearish setups with my style last week. And I only really took one, again, because it was NFP week and FOMC week. And I say this all the time that on those weeks, I'm really just looking to get in, find the best potential setup, and then get out, call it a week, because the market tends to consolidate the closer you get to those events. And so I didn't want to risk it, so I came in, found one really good setup, and then called it. And I outlined all that stuff in the mentorship chat. Again, if you guys are interested, and I obviously post a lot of my gains inside the main Discord as well. So provide that analysis to everybody. Again, all the mentorship students. And so, what do I want to say? So what I would like to see is for this week, I would like to see the market really kind of look at, again, how we're respecting these levels here. So let me go back to the day time frame. And again, we kind of have the same situation that we have on Euro, but just in the opposite direction, where I could see us respecting this order block and then turning things around, but we've also inverted this gap here. So on a weekly level, we're starting to find some level of quote unquote support there. The daily level, we are trading back into a bearish structure, a very broken bearish structure. So what I want to see here again is the market do a couple of things. So I want to see how the market respects this fair value gap right here. I'm going to get rid of some of this. So I want to see the market, how the market respects that level there. And so again, just similarly to Euro, if we start running things up, then I want to see how the market, if the market will respect this level in order for us to keep going down. And so ideally, I'm going to be looking from the weekly perspective. This has the potential to stay bearish, stay bullish, but we did invert this fair value gap here, right? And we also did break structure. So this is actually tipping its hand a little bit more than dollar is as far as bearish nature. I could definitely see this continuing to run lower next week. So ideally, what I want to see is the market trade back up into here and then continue to go lower. But at the same time, I need to see this respected. So I need to see the market kind of turn around in this gap before we start looking for bearish opportunities there. So bearish breaks of structure, engulfing, etc. in that zone. So let's go to GBP really quickly. Same idea. This one's actually very much, very, very bearish. Again, off of this. This gave us a very clean kind of like, again, if you're using retail concepts, a head and shoulders pattern where you see the head or shoulder, head, shoulder, right? And a clean breaking market structure. So what are we seeing now? And then we also saw the market came and really respects this higher time frame, weekly fair value gap. So this is very clean chart that I've seen so far this week. So let's see the market start to continue on that section. Carl asks, do you use these to build your idea on how the futures market will play out in the next week? Yeah, so these videos are twofold. Obviously, I do all of these videos just to show you guys, obviously, to come publicly and kind of outline charts. But these are my outlines for the week. So I take these same ideas and these are what I'm looking for in the market to play out for my actual trades, right? I don't go as low. I say that for the mentorship, right? Going low in the time frames. But I mean, I use these same higher time frame biases when I'm actually looking for my trades in the next week. So I'm giving you, this is basically half a class, but half my homework, right? For the next week and making sure that I'm good to go. So I'm giving away a lot of free game, to be honest with you guys here. This is something that, like, again, You know, if I had a mentor back in the day, 10 years ago when I first started doing this, man, I would have killed for stuff like this. You know, so someone says, can we look at USDJPY? So I'll talk about USDJPY in a second as well. So I'll get to that actually after this one. But if you look at 6B, again, this is the Euro future, or sorry, pound futures. We've had a very clean market structure. We've also in this gap. So if I had to look at these two currencies, you know, I'd like to run bearish this week. I mean, maybe we get a potential retest of the gap right there. But again, I want to see it go. I think it's very clear what the market wants to do. So that's what I'm looking for this week on currencies. Let me look at USDJPY really quickly because someone asked about that. Look at the weekly. Let me see. So if we look at USDJPY right here, you can see that there's kind of both. You can see both playing out. I don't like this at all. It's choppy. It's choppy and it's consolidating. Like you can easily look here and see market formed an initial high there, right? And an initial low right here. And you can see that it's consolidating, right? So whenever I see stuff like this, I don't like this. I want to see the market kind of ranging in or not in a range, but trending. Yeah, so I'm not really a fan of this, to be honest with you. I mean, if I had to like gun to my head, right, like, and I had to pick a market, I mean, I'd like it maybe to come back down and kind of play in this range until it breaks out. But once the market starts forming a wedge pattern, starts consolidating, I kind of just stay away from it. Higher time frames, I mean, I could see this continuing to go bullish, but I can see it both ways. Again, if you can look at the market and call it both ways, then that's not a market you should be trading. So I would not be looking to trade USDJPY this week. Let's look at gold. Is gold still in the range it's been the last couple of weeks? Again, same thing with gold here. Like gold had been in a really consolidation wedge, and you know I don't really trade out of wedge patterns. Like I don't look for how to buy or sell these. I just look for the the volume being trapped. And so when I used to trade, I had a really hard time. When I first started trading, I had a really hard time seeing consolidation. Right, like I would be so focused on trying to buy the pullbacks, right, that I would fail to really see the market's highs and lows start to get smaller and smaller. And so this is something that I just kind of do to see the consolidation, right? Not necessarily to really trade this or trade the breakout of this, but I really like to, my strategy works best in trading markets, right? And so usually if I can frame out a wedge pattern here, it usually means that I don't need to be looking at this. And so I kind of outline this by saying that if I can see that playing out, then it's really just saying this is, bigger consolidation that I need to stay out of until we get something going. But with that being said, we did break out of this. We traded back up in the range. This could be a fake out where we run lower and higher, but there's nothing really here for me to want to do at this point in the game. So I would watch and just, again, watching this without any type of like real bias here. Maybe there's daily setups in that range, right, where you can catch a good, setup, but not really anything here that I'd like want to pay attention to. NQ, I think NQ is going to be bearish, at least for a little while. If I look at an area, there's a lot of trend line liquidity here, right? I like just my eye is naturally drawn to this fair value. It's just very apparent and very open. I would not be surprised if we were two here. We just shy of 1,000. On NAS, so anytime we get a huge, hit a new high, we usually get a very sharp rejection from that, just to clear out any type of buyers and buying action. I also see this imbalance here, the weekly time frame that we could potentially run to, which overlaps. So I think this is a very high probability area that the market might want to run to. But again, NASDAQ is different. It's a little bit more volatile, so you never know for sure. But ideally, I'd like to see something like this happen where the market trades. Best case scenario, the market trades back up to this level here, start at 23,159 into that range, and then goes lower. That's what I would like to see. ES, same thing. ES is just falling apart, man. There is this weekly fair value gap here that we never touched. I thought we were going to hit this a lot sooner. I thought, again, a few weeks ago, we were going to come back down here at the beginning of July or mid-July. We never really hit that. There is a very small secondary imbalance there. But I think with this momentum and this engulfing that we would probably come back into here. And maybe at some point we would, start to go higher. But I would look at this as a downside target for this week, is that fair value gap. Again, I have a hard time shorting markets, shorting against the trend. Right now, the trend is still bullish on the higher time frames. Still very much bullish if you look at where we moved price from for the last few months. Ideally, I'd like to see the market continue to go lower and look in this zone here. So that 6,219 level, I could definitely see us doing something like this, where we maybe trade into this imbalance here at 6,297, or even this one here. But I will note both of them and then continue to go lower. Let's look at YM. Yeah, this is crazy. So YM came up, snatched the all-time high, and then just went to hell. So this one, and we had a clean break in market structure, probably in the weekly too. I'd look at this. Trade it back into this imbalance here. Yeah, I could see this running lower. To where though? That's the big question. So this is your classic liquidity sweep, honestly. Maybe here. I don't really. I don't think long is bearish. So let me go up time and see if I can find this. Tony says, damn, I'm late. My bad, coach. Whatever, it's all good. All good. Freezing up for a second. All right. So yeah, so as far as like a daily target goes, I could see us getting back into that zone right there, start going lower. I have my eyes immediately drawn to this red gap, which is a higher time frame fair value gap. It's a weekly one. So I could definitely see the market doing that. I don't know if this is a long-term trend or just a rejection at the highs. But I could see us running a little bit lower. I don't know if this will be a weekly breaking market structure, which would be getting taken out down there, or a monthly one, but I do think that we could retest this 43,161 level. That's going to be my area that I'm going to be watching. So I would like to see something like this, where again, if we drop down to like the daily time frame, the market retest the zone, could even be as high as there or go lower. Also watch, it's about the same level. Let's still watch. But ideally running up, taking out liquidity, that old buy side, and then the high sharp rejection. I think this is going to continue to run lower. Could be wrong though. So I think that's all I got for you guys this week. I'll stay on for any questions. So again, dollar, when I'm looking at dollar, initially when I looked at dollar, I said I could see going either way and I want more information. I'm leaning more towards a bullish bias on dollar, just based on what I've seen on Euro and GBP. They're just kind of telling a little bit more of the story. But again, I really do want to see what happens when the market goes towards this fair value gap there. Don't really want to take actions on anything until I kind of get a more confirmed sense of what dollar wants to do. NQ, again, bearish. I want to see the market really attack that 22,594 level. Euro, again, I just mentioned more bearishness, but again, just like dollar, depends on how we use its fair value gap level. Obviously, dollar and euro are inverse of each other, pretty clean inversions of each other. GBP, this is bearish. I think this is pretty clean bearish. Head, shoulder, head, obviously clean breaking structure, ran down and left these relative equal lows here. So to be honest, for this week, I would like to see the market come back down and retake that low. And I'll make this note here about these relative equal lows. So I'd like to see the market come back down and take that liquidity. We're technically sitting in a fair value gap right now, so I would not be surprised. We might not even come back up here, but ideally, I'll mark this out too so everybody can see from the high end at 1.3313 to the low end at 1.3291. So one of those two, right? Either this level or this level that I want to see the market. And the market's already kind of respecting this level too. So I wouldn't be surprised, again, if we just get a clean rejection from this and start running down. Best case scenarios, we'd run out to this level again, or at least the minimum, take the high of the week, take the high of Friday and go lower. So again, that's these NQ. We already talked about it. YM. We want to see the market trade back up into this fair value gap or this breaker. Again, they kind of overlap, so taking those things lower. Yes, same thing. We want to see the market come back to this level here. It did sweep its level, so it could be ready to go back already. Versus NQ that did, I guess technically it did too. So still cool. I still think this will go lower before it goes higher. And again, I'm looking at those respective weekly and daily fair. Thank you. So that's what I'm thinking for this week. Again, I'll stay on for any questions if you guys have anything. But again, shout out to my community, talented10trading.com. I'll drop a link in the bio here. Talented10trading.com. Again, this is my trading community. This is the trading community that I have. Again, if the link doesn't work, follow me on social media. It brings trades. Even if the link does work, follow me. But follow me on social media. It brings trades. That way you guys can stay in contact with me. Usually there or the Discord is usually the easiest place to get in contact with me. But again, Talented Trading Community is one that is a Discord community. There's two variations. So there's a free Discord where you can come in and just see the main. There's also a mentorship where I go live a couple times a week. I can't go live, I'll learn trade setups and what I'm thinking based on trade, based on the current market condition. Again, it's not service, but it allows you guys to see my strategy in full form. I also have, as part of the mentorship community, there a course that you guys can see. It's my full strategy outlined in a series of video contents from A to Z. So if this is your first time kind of seeing this style of trading, seeing the strategy, you can see what I do and what I look for specifically. I have a very specific type of trade that I look for every single week in the market and try to capitalize on that. Again, continuation plays. And so in addition to all that, we also do a weekly call on Sundays where I basically try to help people with their the stuff that they're suffering with, the stuff that their problems they're having as traders. So all that together is a really cool value. Again, you can join the mentorship free just to see what's going on, and then make the decision to upgrade from there. But just definitely take advantage of that. Again, I always say this: if I was a trader for the first time today, or 10 years ago when I was first starting to trade, I would have killed to have somebody that could hold my hand through a lot of this stuff, and really give me structure instead of trying to figure it out. And a lot of just time being wasted. So again, if you follow TikTok, Instagram, and hopefully the call, I feel like it looks like it's chopping on me. Hopefully you can still hear me. But get those things out, and yeah, stay in touch with you guys next time. So peace.
Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Hey, if you like futures because of the tight spreads and clear setups, go check out Blue Guardian Futures. They let you start trading futures with up to $450k in funding. The best part, you keep 100% of your first 15k in profits, then 90% after that. No activation fees, weekly payouts, and they're sponsoring Chris Eubank Jr. and Birmingham City FC. Go take a look at blueguardianfutures.com or click the link in the description.